Welcome back. We welcome our first guest for the morning. Anup Bagchi, Managing Director and CEO of ICICI Securities, has joined us. Anup, I have a lot of unhappy things to check with you on this Andhra loan waiver, the monsoon, their impact on finance stocks. But before that, give us an idea of what exactly transpired at the meeting with the FM. What are the key takeaways you came back with? Did it look like some of the issues that industry faces is going to be addressed?
No, I think the meeting was more about hearing and not about talking. So
Okay.
that is one. I think each one of us sort of, expressed whatever we had to do.
Nothing at all that the FM indicated he would resolve?
No, nothing. It was a listening. It was a listening meeting completely. But, we all came away quite happy because I think, the whole issue is quite serious. They are well aware that, fiscal is an issue that has to be sorted out. And things have to take. So it was a listening meeting. It was not a speaking meeting at all.
Okay. So you get the feeling, since you just said that they are well aware that fisc should be reined in, that this is not a budget of tax giveaways.
It doesn't look like. Who knows?
Okay, Anup, hi, good morning.
Good morning.
The one fear that everyone has now is the monsoon situation.
Yeah.
Of course, the going has been so good up until now. But do you think this trigger has the potential to derail the market?
It doesn't look like that this trigger has a potential to derail the market. I think what can derail the market is, if budget becomes again populist and fisc is not controlled and there are no indications of, solid movement forward, the projects are not the bottleneck. That is a bigger worry, because at this point of time, I think there is a lot of hope that things will become okay. And I think everybody also realizes that there is also a lot of anxiety that things indeed will become okay. Because certainly market, the way it is running up, it certainly seems to factor all good things of life.
Is it getting a bit more broad-based now, or is the retail action picking up, HNI action picking up, or is it still solely being driven by FIIs?
No, first of all, retail, last 10 days, the net flows have turned positive in mutual fund. Actually, till 10 days back, it was negative.
Okay.
So whatever we saw in the month of May, that is the net inflows, which is 5-year high incidentally. It has all happened in the last 10 days, last 7 days of May, and first week of June also it is positive. To that extent, yes, one can confidently say that retail is coming back. But is it coming back with a bang? I don't see it still coming back with a bang. The larger HNIs are coming back faster. Retail is still skeptical. So that is there, and hence on the DII there is a net flow. So domestic institution there is a net flow, but still there is a lot more of sector rotation happening rather than net buying happening. Even on the FII, actually if you see, the volume of buying has not been that high, as has been the velocity of the index movement upwards. But we did a check with all the FII. There is a gap between the bullishness that they feel and the goodness that they feel vis-a-vis the allocation that they have had. So there is a gap between bullishness and the allocation.
They're not walking the talk.
No, because they have not got the allocation. Not that they can independently do it on their own. But the confidence is that I think allocation will follow. And then it will take it up further.
Okay, Anup, at the moment, what are you advising your investors? We have seen a fairly one-sided or a one-way rally. And the last 5 days have been particularly emphatic, with the market ending at new highs every day. Are you asking your investors to buy even now? And if yes, what?
No, two things. That people who have, if your goal has been, financial goal has been met, please book part of your profit. Okay. That is number one. Okay. Number two, as I always say, the boring things, continue to do your SIP and don't get swayed. The market has moved up 10%, market has come down 10%. Because everybody who has done systematically SIP, and we have a lot of SIP clients with us. Actually, you look at their portfolio, they look far, far healthier, I must say, than most of the fund managers' portfolio. Okay, because through up and down, if you keep on putting money, that's a short way of, gaining and certainly getting hurt less. So part profit booking if you have met your financial goal, otherwise keep on doing your SIP. The last thing that you should not do is get excited and put lump sum money, whatever you have at this point of time, as if there is no tomorrow. Tomorrow will come.
Okay. Would you buy the banks now? I'm worried because bad monsoon could mean bad loans for them, as well this tendency of governments to excuse loans.
Banks, as I say, like I said last time also, public sector banks, I think large public sector banks, they are good trading.
Even at these levels, today's levels?
At today's level, it is going a bit stretched. I would wait for this quarterly results to come, because if you look at earnings and cash flows, they are as good as bad as they were last quarter. So it's not that there is on the ground there has been some great improvement. The mood is very positive, sentiment is very positive, but it's not that the cash flows and earnings have started moving as yet, because government spending hasn't come and all of it hasn't come. So I will wait for 1 quarter. But if there is the banks are running up because they think that if projects get debottlenecked and they get commissioned and things become okay, the NPA pressure will come down. My personal view is that it is not that easy.
Okay.
I don't think it is that easy. But at this point of time, it has run up. So if you are sitting on a portfolio which is making money, you should book part of it certainly.
Okay. What about a sector like cement? If someone has missed out on the rally in cement, is it too late to get in?
No, I don't think. Cement I have always maintained, it's a good proxy for good infrastructure stock. Most of the balance sheets of cement companies are very good, so they are strong balance sheets. And if infrastructure and development and investments were to come, I think cement will be a big beneficiary for sure.
Do you see a correction round the corner?
I see some correction around the corner.
Even pre-budget?
Yeah, even pre-budget, I think.
Okay. And to what level do you see this correction, and at what level would you think is a good entry point for retail or HNIs to get back in?
I think it will be very, very healthy for the market if it comes down to 6,800, 7,000 levels, sustains there for some time, because that is when I think most of the speculative froth will go out. Once again solid buying will come. So I really feel that it should not be one way. It is bad because you then get a feeling of missed out. From fund manager perspective, they also feel a feeling of missed out. And then not so questionable stocks, they are forced to buy because of valuation and not because of fundamentals.
Okay.
I think so one correction I think would be very, very healthy for the market.
Okay. What about the realty stocks? We have seen it's the realty rally or the last 3-4 days when the Nifty rallied. I think 3 days on a trot, realty index has gone up 5%. Would you pick any of those stocks?
No, I think what is happening is people are getting tired of buying the old large caps and then bringing down and doing fishing on the valuation, which I never think is a very, very good healthy thing. Which is why I feel that a correction must be there.
Okay, I noticed in your best picks you have Coal India. That one saw a big move yesterday, and the president had addressed the fact that coal reforms will pick up. Is it still a good buy?
Like Coal India, we brought out a good, very strong buy much earlier.
Yeah.
It is because, one of the beneficiaries and one of the focus area is coal. If the focus area is coal, then Coal India is the only one available, there is nothing else available.
So would that also extend to many of these power companies? I mean, the power grids, NTPCs of the world, because coal power reforms are expected.
Coal power reforms, but but essentially the bigger beneficiaries will be the projects which are stuck. Okay. Not so much of NTPC. Power Grid certainly is a very solid company again. It has been a strong buy for us for a very, very long time. But otherwise, the stuck projects are the priority, because stuck projects, the other thing is that there is a lot of dollars stuck in these projects. If they get unlocked, then they get added to GDP. The fact of the matter is that close to $60-65 billion is giving us zero returns actually.
The experience of the past, Anup, was, a banker pointed out, was that really not much of the confirmed NPLs get sorted out. What happens is that when the economy picks up, we give so many new loans that the NPL percentage tends to look smaller. That man, of course, maybe he was just being a cynic, but he sounded much less confident of unlocking money from what looks like an NPL today. But anyway, that discussion for a later day. When I look at your list of top buys, almost all of them are Nifty buys. RIL, ONGC, L&T, Axis Bank, PNB, IDFC, Coal India, Ultratech. What about the mid-cap space? That's where the rally has picked up speed. Can you identify something for us that still holds value?
No, my identification always mid-cap go through funds for retail investors. They invest in top fund, because this mid-cap rally, chasing a mid-cap rally is a dangerous thing from a retail perspective.
You could burn your
because they are very volatile. Because the whole thing is that market cap is small, free float is small, and small amount of money pushes it up. And then if the liquidity suddenly dries up, it can correct also quite sharply. So always mid cap is through funds.
So since the last time we spoke with you, have you changed your year-end target on the Nifty? And if yes, where does it stand now?
No, year-end Nifty remains the same. We have to actually now, I think the issue is to see action, follow through action. I think a lot of it is already getting discounted the way markets are. Frankly, had I expected such a sharp run up that we will be sitting here within a few days, within 3 days it will go to 7,500 and then it will go to 7,600. The fact is I had not seen that the run up will be so sharp. I thought that it will consolidate and then it will move up. But it seems to have moved up. But I feel that there should be a correction and a consolidation, and then it will move up for sure, because I think the general mood and the general resolve is that things will be sorted out.
All right, Anup. Pleasure speaking with you. Thank you very much for joining us, both for your fundamental optimism and the word of caution.